All right, everyone. Well, here we are. We made it to the end of the week. This has been a great week. I've been so impressed with the volatility and the action that we've had in the market. We've had some large cap, mid cap stocks have been moving really nicely. We've had some penny stocks that have been moving nicely, and we've had some small caps that have been fantastic. I was so surprised this morning when I pulled up the scans on my phone and I saw CING was already up 80% again today. In fact, this has gone up 971% over the last 2 days. Wow, that is impressive. So it was my biggest winner yesterday, and I traded it again today. But you know what? I found it a little more difficult today, much more difficult than I did yesterday. And I think this was the result of now it's a little more expensive. The spreads are a little bigger. The volume is a little lighter compared to yesterday, so not quite as good liquidity. And that creates bigger whips where we see the pop and then the jackknife. And I saw a couple 2-point flushes, and it doesn't take much for that to wipe out a trader. So I did see some people who are saying this is really hard. I keep catching losses. I'm getting chopped up. I'm getting frustrated. And so let me walk you kind of through my day today. So as always, I'm pulling up the scans pretty early. And the first thing that I saw in the scan was CING. And I was surprised, but I realized, well, it popped up at 4 a.m. And I guess that makes sense because European traders must have seen the news and decided to trade it bright and early. So 4 a.m., it pops here up to 10. And even yesterday, it was really strong in the morning, but then it pulled back. It was more or less sideways until squeezing up at, 1:30, but then it flushes back down. So after hours, it pops a little bit, but I kind of thought it was done. So I was surprised to see it on the scan this morning. And so I came over here at 7 a.m. and I took my first trades on it right at 7 a.m. So let's jump into that very first trade. Okay, so we're going to get dialed in here. We're going to go to the 10-second chart. I'm going to show you the 7 a.m. little pullback. So coming right into 7 a.m., I'm watching it right here. And at 7 a.m., right before it dips down here, and it bounces back up right here. And I got in for the bounce back up. So we got the bounce back up. And on that first trade, I made $900. And I was like, you know what? That was pretty solid. That is not a bad trade. You know what? That's just about my $1,000 cushion. That's my first goal each day, just to make $1,000. And then once I've got that first goal, I'm comfortable taking bigger size. So it ends up dropping back down a little bit. And at that time, I started feeling a little unsure about it. So it pops up here to 990. It sells off back down here to 890. And I'm like, shoot, I was really hoping this thing would break 10. But now it's kind of dropping back down. So it comes back down to 890, down to 9, or whatever, 899. And it's sort of going sideways here. So while that's going sideways, I ended up trading a couple other stocks, which I'll show you in a second. But it then starts to curl back up. Now, I don't know what happened, but for some reason today, my internet went out. So my internet goes out, and it happened, I'm not kidding, happened right here. My internet goes out. It's out for like 10 seconds. But then it reconnects, and I see this here, and I punch the buy button right at 885, 888. I'm like, okay, here we go. We're looking for the break at 10, but my order gets rejected. What sometimes happens with my platform is if I get disconnected and reconnected, it won't let me trade until I log out and log back in. So it pops up to 1030, and of course I missed the trade. But, in hindsight, it only popped up for a second and then it came right back down. Kind of did a head and shoulders pattern. So then it comes back down and I'm thinking, man, this is not easy to trade. But as you'll see, it did rally back up and I did get one more trade on it for the break through this level. And that is what put me up a total of $2,200 on CING. Here's my P&L for the day. $2,534.37. A green day, hitting a base hit. It's not a home run, but slow and steady wins the race. And I'm feeling good right now about my approach in terms of consistency. When it's hot, I'm trying to step up and take more risk. And when it's a little colder, I'm trying to slow down. So if we look at the month right here of August, you can see that I'm sitting at about $47,000 on the week, $61,000 on the month right now. Looking good. So $2,500 today. I'll take it. You know, small green days like this is a break even day basically, but small green days like this are fine. And then when the market sets up, boom, big green day, bigger green day, bigger green day. This is showing in net, showing gross is before the fees and commissions. So the commissions do certainly add up. Now, if we go to detailed and we scroll back here to, let's see, year to date, right now I'm sitting at 620,000 year to date, accuracy about 65%. But what I noticed here for the month of August is that my accuracy is about 69%. So this would make Elon Musk very proud. I don't have 420 of anything right now, but if I get myself up to 420 shares and maintain this accuracy, some would say that's legendary status. I don't know if it's going to happen, but we'll see. Anyway, so right now, yeah, I'm feeling pretty good about the month of August. I'm starting to kind of get honed in on, can I cross over 100K in gross profit for the month? That's the next line in the sand. I did the same thing in July. I thought, all right, I'm up, 60, 75,000. Let's set that mark at 100K and see what I can do. So we've obviously still got, some good time left in the month. We've got 2 full weeks. So 2 weeks, I did 52,000 in gross this week, 47 net. So 2 more weeks, I could break 100,000. It's very much within reach as long as I keep my head down and stay focused. Again, I don't want to focus too much really on those big numbers because it doesn't matter at the end of the day. As long as I'm following a process that I can repeat, that is consistent, that's what's important. So yeah, so CING ends up making this big move. It sells off. And in the interim, I got a trade on SWIN. SWIN was kind of interesting because this one popped up. I jumped into it at 310, 315, 320, right around there. It goes to 345. It comes back down. I lost $400. So I was like, all right, well, that didn't work. Ended up coming back up again, but I didn't get back in. And then I took a trade on LRHC, long at $1.75. It squeezed up to about $1.95. This one pulled back as well. Ended up actually going down, red on the day. So that's not so nice to see. But, it had earnings, but it wasn't enough. It didn't hold up. So at that point, I was like, all right, switch back to CING. Got my last trade on CING going into the open. And then, of course, we've got right now CING up at $18 a share. So you're probably thinking, why didn't you trade it through here? So at 10 a.m., I switched gears and started teaching class. So at that time, CING, right at 10 a.m., it was right here. It had just come up again and rejected against this ascending resistance line. And I said, I could focus on trying to trade this, but I said I was going to be teaching classes for our Warrior Pro members starting at 10 a.m. And I'd like to keep that commitment that I made. So when I teach the classes, all these classes, of course, get recorded and added to the curriculum. So I'm working my way through updating these classes for our members. And so that's what I ended up doing. So I taught from 10 to 11, then 11 to 12, 12 to 1, and 1 to 2. And now I'm done with those classes. So did about 4 hours of class today. And those are all recorded. They'll be uploaded for members to watch as they'd like. And I saw CING going kind of in the background here, in between, when I was on break between chapters, I was like, oh yeah, I see it. And my analysis of it was, if we look at the volume profile, we've got high volume selling, and then it halted up, but then had a high volume selling candle. So I said, I don't love that. I also don't love the spreads on it. I pulled it up, I looked at the level 2, and although the spread right now looks tight at 5 cents, what you'll notice is that this thing drops fast. The bid is gone, and all of a sudden it's down 25, 35 cents. In fact, at one point I was seeing, we had a 2-point flush, which is a pretty intense flush. So dropping $2 a share. And I thought, if I was going to trade it up in this price range, I'd really have to trade with pretty small share size. And then I was like, is it even worth it? I'm only up 2,500 on the day, which don't get me wrong. I don't want to sound ungrateful for being up 2,500 on the day. This is a good day. It's a green day. But my daily goal is a little higher, 5,000. And the fact that I traded, probably 3 or 4 trades on CING, and then, these trades here, it just kind of wasn't happening for me today. My best days, I'm above 5,000 pretty quick. And it just didn't happen today. So I sort of felt like this isn't the type of day I should push my luck. It's a Friday in August. I don't know if it's worth it. And at this price range, you just start dealing with bigger spreads. Now, the traders who often do the best in this range are traders who are comfortable sort of buying off support, a smaller position, and just holding it and not letting themselves get chopped out, staring at the level 2, just getting in and either using a trailing stop or just manually moving a live stop order up and not getting stopped till you get an exit indicator. But I'm not great at doing that because with small size, it doesn't feel really worth it. And with big size, I end up over trading and sort of over managing it. And nonetheless, I really wanted to focus on teaching the classes today. So, right now it's 210, and this, who knows? By the end of the day, you could get more on this. You really might. But there's also risk of an offering. That's what I'm a little concerned about. So if we pull up the filings on this one. So this is a company, let's see, so first of all, do we have a shelf registration? And you'll see that there's a shelf registration from July 15th. So shelf registration to sell 6.6 million shares of common stock. So let's keep that in perspective for a second, 6.6 million shares. Now the float on this, if we check the filings, we'll get the official float. It's 950,000 shares. So currently, right now, the float is 950,000 shares. So that's 950 right here, 950. But they're prepared to sell 6.5 million new shares. What's that going to do to the value of these shares? It's going to dilute the value, right? So you've got right now, it's trading at $19 with 950,000 shares. If you dilute this to 1.8 million shares, it's 50% diluting the value of the company for each shareholder, right? If the whole company got bought out. So a 50% dilution should result in the price dropping, down towards 8 or 9. Now, if they sell, let's see, so they go from, if we do it double again, we go up to 4 million float. That's going to bring it down to 4. You go to an 8 million float, it's going to bring it down to 2. So I'm worried about this bringing it down towards this level. Now, I say this when at the same time, we did just see GNLN do an offering this week. If you recall, GNLN had this offering where the stock squeezed all the way to $21 a share. And then they sold 2 million shares, 2.5 million, I think it was, at $2.50. That was the price of the offering. And the float there went from 500,000 all the way up to a 3 million share float because of that offering. So it increased this by 6, right? So all of a sudden you get this big jump, the float goes up, and the price held up. In fact, it actually made a new high the next day, 2 days later. So I don't want to be too pessimistic that this is going to go to $3 a share, because it may not. It would certainly depend on a number of factors, including certainly what they sell the shares for. If they do the offering, they might not. But then let's go back in here. Let's back up. Let's go to the 10Q. So this is the quarterly earnings report. And I'm going to scroll down here. So now what I'm checking is I want to see how much cash they have. So I'm looking at their current assets and their cash and cash equivalents. Other receivables, 1.6 million. Okay, but cash and cash equivalents is 380,000. Prepaid expenses is 500,000. So they've got total current assets of 2.5 million. Property and equipment is 2.3 million, but they're not going to sell their property and equipment if they're trying to run the business. So it is an asset, but they're not going to sell it to run the business. So total assets, 5 million. Accrued expenses, accounts payable, 1.3 million. They have 1.3 million in accounts payable, and they have $380,000 in cash. Accrued expenses are 380,000. Total liabilities are 2 million. So you can see this is not great right here, just at the surface. But now the question is, how much are they making each quarter running the business? They're making enough money, it doesn't matter, because they're going to make the money and they'll cover their cost of They're losing operating loss $3.2 million in the first 3 months that ended June 30th, or in that 3-month window. 2023, they lost a total of 6.3 million. So again, for the quarter over quarter. So that is their research and development expenses are a bit lower, it looks like, than they were previously. But now I'm looking and trying to see where's the income. So I'm seeing operating expenses, net loss. I'm not seeing income. So it's a Delaware corporation, biopharmaceutical company focusing on the development of products utilizing drug delivery platform technology, enables formulation manufacturing, once daily tablets for ADHD, which is great. But a lot of these companies, and I don't know this company, so I don't know, but a lot of these companies, the way they work is they get investors who buy into what they're working on, what they're pursuing, the drug that they're trying to create. And they invest in the company. They give them their money and they say, here's $10 million. You go do the research and development. And if this company is successful, if they create a drug and they just created one that gave them a patent in Europe that becomes popular and widely adopted, then that drug could get purchased by one of the big pharmaceutical companies. Now, naturally, the big pharmaceutical companies do their own research and development, but they also frequently will just come in and swoop up a small company that has come up with something that's really great, right? I mean, that makes sense. They just come in and they say, hey, you figured that out? Here's a check. It's ours now. So that's when the early investors and shareholders, cha-ching, get the buyout. That's when they make money, when the company actually ends up coming up with this drug and bringing it to the market. So a lot of these clinical stage biopharmaceutical companies are operating at a loss. They need to keep raising capital by selling more shares to investors in order to keep funding operations, which hopefully will turn into something coming in, onto the market. And that happens for a lot of these companies. But of course, for some of them, it doesn't end up happening. You know, they try and try and try, but they're not successful. And eventually investors run out of appetite to keep funding a company that doesn't have a track record of success. And so that's where you have some risk. Now, the way they can raise money on the open market, if they want to raise money on the open market, is they could sell to institutional investors. So let's say you're a multimillionaire and your financial advisor says, hey, I know this small cap biopharmaceutical company that's working on this new drug, whatever. Now, they can't tell you any insider information because of insider trading rules, but this is what they're working on. This is their pitch deck. And then that millionaire says, okay, well, I am an accredited investor by the SEC standards, so I have enough money to make this speculative investment, and I would like to invest. And so then the financial advisor creates that direct relationship. They make the investment. That person now gets shares of the company, and they're a big stakeholder. Now, that's when they're going after kind of like a whale, someone with a lot of money who can just write a check for $3 or $4 million. But most of the institutional traders that are placing those types of investments, in order to get a check for 4 or 5 million for a small cap company like this, usually the deal is that they get a discount on the current trading price. So the current price is 19. I'll give you $5 million, but I want those shares at $6 a share. They're like, 6 is too low. 7, 650, 670, 656, 653, whatever. They go back and forth. They finally come to the number, and then that becomes the offering price. Now, the fact is they want that insurance that they can get the stock cheaper than it's currently trading for. So if they need to turn around and sell the stock, they have some time to do that and they still have a profit. So it could come down a little bit and they're still in profit. Now, sometimes they'll just sell it immediately on the open market because all of a sudden with this news, the stock's up 100%. And then who's buying those shares? Well, maybe it's retail traders like you and I. Maybe it's traders who don't have a lot of discipline, who hold and hope and end up getting stuck holding the bag. And what sometimes happens is these companies can't find qualified institutional traders anymore. And so they just sell the shares directly on the open market to the retail traders like us that are buying and selling every single day. So that type of direct offering in some ways is better, because it's better for shareholders in some ways, because they're selling at current market price. However, if you sell 10 million shares at current market price and a stock only has, 1 million shares of volume, well, obviously that wouldn't work. But if it only had a small amount of volume, like 20 million shares, then 50% of all the volume is selling volume. It's going to drive and force the price down. So that's obviously going to be a problem. So usually if you're going to sell directly onto the open market, which is what happened with GameStop, they're going to sell where the total selling volume is going to be less than 10% of the total volume, because they don't want to flood the market with sell volume. So then if you look at a stock and you think, okay, well, let's see, how many shares does this one have today, just for instance. So CING currently has, what was it up here? It's got 89 million shares. So to be honest, it is very liquid. If they wanted to sell 6 million shares right on the open market, they could have done that today, and they could have raised some $60 million or more. They could have raised a lot of money doing it. So this is a stock that actually has the volume to support that kind of selling. And GameStop did as well. GNLN the other day did have the volume to support it. But for some reason, rather than selling shares on the open market, the CEO and the board directors at GNLN did a private placement, and they priced it at $2.50. So the person who got that private placement now has shares at $2.50 a share. And they could turn around and sell them right now in the market at $11 for a 300% return, which is kind of an insult to shareholders, because they diluted and priced the value way too low compared to its current trading price. At least that was my opinion. So look, CING, it seems like a stock where they could raise some capital. They would benefit from raising some money. So I think that there's a high risk of some type of event where they raise capital, whether it's through a private placement, it's warrants, it's direct offering. I'm not sure, but it wouldn't surprise me. And, this is the risk where the longer you trade these stocks and keep holding it, the more you expose yourself to that news coming out and that big jackknife candle. And it's not fun when that happens. I don't want to see that happen to any of you guys. So, I focus on trading these kind of in a little window in the day where I feel like I'm trading it right when the news comes out at the beginning of the move. And usually a company doesn't put out news and then an hour later, the offering. I've seen it before, but it's very rare. So usually the offering doesn't come for a couple of days. Sometimes it's the same day, as was the case with GNLN, but usually it's a couple days. So, but look, CING is on day 2 right now. This right now is day 2, and it's a Friday. So, kind of the end of the week. It's a U.S. company. If it was a Chinese company, I would say we're not going to see an offering at this hour, because it's too late in China. It would have already come out if they were going to do the offering at this time today. Looks like I lost my connection again there, but anyways, so that's the thing that I look at on something like CING. Again, that's just my take. I could be wrong. Maybe this keeps going higher. Maybe they've got something in the works right now that's going to help them raise money with this new drug and the new patent approval without having to sell any more shares, right? I don't know. I mean, the only people that know are inside the company, but, and of course the people at the investment bank who may or may not be working on a deal. And of course, all the friends that they whisper to when they're in the polo, riding their polo horses and, playing, cribbage or backgammon. And what else do those kind of people do? I don't know. They play squash. So those people all know, but as retail traders, we're kind of, we're in the dark. So we just have to guess. And ultimately, we have to play a bit of defense. That's my opinion. We've got to play defense. We've got to be a little careful, because trading is hard enough without getting caught in these kind of liquidation events or, dilution events where you get some type of big flush. So you've got to know your niche in the market. I love trading small caps, as I've talked about and I highlighted in yesterday's episode. I hope you guys checked it out, because they're highly volatile. This is the only place in the market other than penny stocks where you can see, 200, 300% gains in one day. In fact, if we look at the biggest percentage gain today, well, we're up 970% over the last 2 days on CING. And just today, we're up 283%. So if you're looking to grow a small account, no doubt these are the types of stocks to trade. The question is, when is the time of day to trade it where you have an edge and where you can manage your risk so you're hopefully not going to expose yourself to catching a jackknife? And one of the things I'm a big advocate of is paying yourself. Take some profit, pay yourself. And then once you've got a little cushion, if you want to take whatever you made or half of that and put it as a little bit of risk to work with for the rest of the day, that's fine. But your first goal every single day is to get yourself in the green so you're trading with like house money, so to speak. Because when you take your first trade and you go red, you're having to give money back to the market. So that's what we want to avoid. We want to avoid giving back money to the market, get ourselves in the green, build that cushion, use that cushion to take a little risk, especially when the market is hot. And CING yesterday on day one of the news, that was when I did well. And I'm really glad I traded aggressively yesterday. So sitting up almost $50,000 or whatever it is on the week, including today, this is a fantastic week. So thank you guys as always for tuning in. If you haven't checked out some of my full-length episodes, I'll put a link to them here. I'll put the stock selection one here, and I'll put another one right there that you guys can check out. And I will also link a 2-week trial in the top of the comments and in the description that you guys can check out. So if you want to trade with me for the next 2 weeks, you're welcome to do that. Even though it's 2 weeks, so you'll have all of this week and all of next week, even though you're starting today because it's a 14-day trial. So 14-day trial is $19. That'll pay your market data costs for the scanners, for the charts, for the news feed, and you'll be able to tune in and listen to my broadcast while I'm trading every single day. And remember, while I'm trading, full transparency, you can see my profit loss statement. So if I'm in a stock, you see. If I'm out of a stock, you see. You'll see my average price, so you know whether or not I'm in or out. So make sure you check out that trial. And as always, I'll remind you, hey, trading is risky. My results are not typical, so please manage your risk, take it slow, and always practice in a simulator before you put real money on the line. Have a great weekend. I'll see you back here on Monday.